So my name is Rich. This is an EZQualify training. We're going to be talking about loan programs. And right now it's May 22nd, so 2013. So these are basically the programs that are out there right now. And my goal with this training is to help guide you and help you know a little bit about the programs so you understand it. Okay? So as of this moment right now, it's very rare to have portfolio programs. So we still have a lot of lenders that are basically going to run DU or run LP, which is Fannie Mae or Freddie Mac, and lenders that follow FHA rules. So in a nutshell, the biggest niche that we have right now is the ability to take raw findings. Okay. So, for example, FHA has no credit score, but a lot of the lenders that we use will overlay a credit score requirement on those. FHA has no trade line requirements. A lot of lenders will require trade lines. So, in its raw form, it can be pretty powerful, but you have to question when you read a guideline if it's something that the lender is overlaying. Lenders overlay guidelines just in case they can't sell the loan. Typically, for example, they might sell the FHA loan to Ginnie Mae directly, or they might go through a third party, like let's say GMAC, to sell the loan to Ginnie Mae. Now, if a lender sells to GMAC, GMAC may have an overlay. This is commonly called an investor overlay. If the GMAC has an overlay, they may force that onto the particular lender. Okay, the lenders that sell to GMAC will be called mortgage bankers. All right. So basically, this is the current state right now. What will happen at the end of the year is we'll start to see a lot of lenders get competitive with Fannie and Freddie. Okay, they'll start to offer portfolio conforming, they might call it, portfolio conforming products that will be competitive because the government is encouraging them to lend, and they're basically going to have to write the rules on their own product. Okay, banks right now do not lend their own money. They will basically gather the money, put it into escrow, and then sell it on to the secondary market, and they get a refill of the same money that they lend out. Okay, so but the government wants them to lend money, so we'll start to see portfolio conforming. How is this going to happen? This is basically going to be a extension of the jumbo product. Okay, so right now we have a lot of lenders lending on portfolio jumbos. Okay, and because there's so many buyers in the marketplace, the portfolio jumbo requirement right now is 20% down. Okay, that means you put down 20%, then I can probably get you from 5 different lenders a portfolio product. Okay, that means they're lending their actual money on something like a 5-year fix, a 10-year fix, some type of portfolio program where they can actually service the loan themselves and actually own it. Okay, this is going to be extended, I predict, to the lower end. Okay, so we're right now we see certain things, like we'll see restrictions. Let's say there's a property that has an illegal unit attached, but it's grandfathered in. Sometimes Fannie Mae may not take that. We'll start to see it go under this product here. So I believe that they'll start to advertise a portfolio conforming product and a portfolio jumbo, instead of just saying that portfolio jumbo will now go here. Because when we think of jumbos, we always think that it's more expensive. So I believe that they'll start to separate that. Okay. So the biggest niche that we have, in a nutshell, is the ability to choose the lender, to find the raw findings. Okay. In essence, it's the ability to broker. It's basically saying that we do shop around for your loan. Okay. Yesterday, I was talking to a client. He had a short payoff done in 2010, and part of my pitch to him was that I have done clients that have mods before, and that now want to do a refi because now their credit is back up to normal. But for his scenario with the short payoff, as long as there's a valid hardship, there's a chance that one of my 17 lenders can actually say yes. So all I really do is get the inputs from the client, put it into my system. Okay, our system is called Deal Tracker, and then the outputs come back, and we know with a reasonable probability of which lenders will take the deal. Okay, that is really what I'm selling the client. I'm selling it on, and I show them the lender list that I have. I actually show it to them. And when the client knows that you've taken the time to shop around for their loan, they're more loyal. When the client feels that you're forced to use one lender and that's it, then they're going to shop you because they don't think that you're doing the best job that you can be doing. So in a nutshell, basically, I sell the system that we have. I show them the system if they're live, I show them my lenders, and I basically tell them we're going to shop it. Okay. Another example was just a couple days ago, we had a deal where the client only had 1.5 years of working history. But the rule is 2 years, right? Well, with my system, we found that it's 1 year and 5 months actually. We found that we have a couple lenders. How many?
Probably 3 or 4.
Three or four lenders out of the 17 that will take the deal. So what I do when I take a scenario in is I'll actually kind of be like this. So let's say the client's right here. I'll be like this. Like, in other words, I don't want to waste your time. I don't want to waste my time. I'm going to shop a loan. If the answer is yes, I'll take your deal. If the answer is no, then I'll push it back.
Less than 2 years for show sale?
No, less than 2 years for employment history.
Employment.
Yeah. Now, if I go advertise that, by the way, I get a ton of scenarios coming in with a 1.5 year work history. It doesn't work for every single scenario, right? This guy is an electrician. He has no degree or no license. So he works for his family. So it's a brand new job. I got no certificate. Sometimes I don't even know that I could do the deal. But what I tell the client is, before you give me all your stuff, give me the basic minimum, because I don't want to make copies, right? Give me the basic minimum and I'll go shop it. Once I give you the go, then give me the rest of your stuff. When I approach clients like that, what happens? They trust more, because chances are, sometimes, that Bank of America got all their stuff, Wells Fargo got all their stuff, and at the end of waiting 3 months, they got to know. So they already have that mindset. Now if I tell them I'm doing this up front, they're going to be more and more appreciative of that. And for me, again, it's less copies, less scanning. I don't waste my time. So when I basically sell the system in a nutshell. I sell my ability to broker as one of the biggest advantages of working with me. My ability to broker. Okay? In the old days, my ability to send the deal to 4 lenders and have the fastest lender come back. Right? In the old days when we could submit when it wasn't so tedious. But now I sell my ability to broker. Okay? And that basically means that my clients have really, really, really easy expectations because I said it. Okay? I didn't promise them, don't worry, I'm going to get your deal done, and then find out later that I can't get the deal done. I want to say, hey, before I get the rest of your tax returns, I want to shop it first. Then it's going to be on these lenders that said yes to whether I can get your deal done. And they understand that. So that being said, let's go through some of this, because when I say raw, I mean that whatever the system spits out is really what can happen behind the scenes here, okay? So step 1, the system, I use it to find a match, okay? That's really a matching system. When you're 1.5 year work history, or what other weird things have we done? Borrower got a modification 2 years ago, but now the credit's back up. That's stuff that will go in the system. Unpermitted bathroom. Okay, we had a client with unpermitted bathroom, and most lenders would say tear it down because it's plumbing. We were able to find a lender that said you get to keep it. So the system allows us to find this, but really what we're doing is really find a lender that will not have any overlays on the guidelines. Okay, not have anything extra to add to the guidelines. Okay, finding the raw lenders. So let's go over a couple niches, okay? And I'm going to tell you whether it's a real... All the niches right now, they're not portfolio products, so it's just loopholes, so to speak. So part of this folder package here that you can generate yourself by going to the website 1003disclosures.com. We actually have a lot more niches, surprisingly, than what is in my folder packet, okay? So I will show you. So I'll show you the website here, okay? And you're gonna say, "Well, Rich, what is this program here? I'm not aware of this program." It's not a program; it's just experience. So it's basically the ability to, It's basically the ability to get a raw guideline and to get the loan approved with the raw guideline. I'm basically selling a loophole. Okay. So on this website, which you cannot see, so our website, Town 3 Disclosures, on the bottom you're going to hit flyers. Okay. And a lot of you may not be aware of this, but you can generate your own flyers. So we have the pre-templated flyers, which is all on top right here, but we also have the custom flyers. The custom flyers are available from the drop-down. Okay, so I'm going to zoom in a little bit. And within the drop-down program, you can see that we have 0.5% down, we have 97% conventional. Now here's the rule, okay, because really I'm a fan of systems. So whenever we send an email blast about a special program, my virtual assistant will actually create a flyer related to the email blast. So if I'm marketing, so basically if you're a loan agent, you could take my email blast, put your name on it, and then have the flyer and go out in the field and basically get business. That's how easy it is. So we sell a 97% conventional, 0.5% down program, below market rates for conforming, FHA. FHA in general, buy with 3.5% conventional loan. Enhanced DU, FHA flipping for national. VOE is discontinued, so I can remove that. FHA streamline, no doc. Purchase approval in 24 to 48 hours. Raw loan program. Single pay MI, unpermitted edition. Non-income co-borrowers, and VOE program again. I don't know why there's two. So any of these flyers can be generated from the drop-down. What I'm missing here is delayed financing, but I'll have my virtual assistant do that, where they can basically put money in and then cash out right away. Alright, so in a nutshell, I basically outlined 10 programs.
What do you mean?
They can buy all cash and then cash out within 30 days. That's called delayed financing. I don't know why it's called, it's an awful name. So,
and for taxes purposes, what's the implication on taxes for that?
I'm not a CPA. I just pretend to be one. So the tax consequences on cashing out, they have to check with their CPA. Is it used for home improvement? Is it used to purchase the property? That's very specific. The flyers that will generate from the system will look something like this, where it will have a slogan, it'll have some basic bullet points, and it'll have some niche guidelines in here. Okay. Once you choose the flyer from the system, let's say for a national program, you'll be able to customize it, because it's going to ask you for your name, your NMLS number, your phone number, your email, and your website. So you can see here that mine's already in here. Everybody that joins us has a website. It's basically EZQualify.net/first name, last name. So that's automatic. That means that any consumer can go to the website and fill out the loan application. Okay. It creates a Fannie Mae file, but there's bugs, so we take the raw data and we can actually input it into point. Okay. Again, I'm a fan of systems. So that's the website that's referenced in here. Okay. The other website, because there's two types of businesses that we support. We support doing B2B business, which is from realtors, and we support doing B2C business, which is from consumers. Okay. I would say that we're we're a purchase shop, so we have a lot of purchase business deals. Okay. That's just how it is. When rates go up, we're not struggling. We have deals, and we have lenders that understand we're a purchase shop. Okay, so that's our old philosophy from 2004. B2C is like refis, direct to consumer, people getting a loan they found online, circle of influence people. Now, my circle of influence people is not big in this area, so I've always relied on B2B business to help me. So that means I network with other realtors, and we basically can get a loan done. Purchase deals again have 30 days to close usually, so I get a paycheck at the end of 30 days. So this flyer is geared towards B2B business. Okay, it's going to use a lot of terminology that the average consumer will not understand, and it'll say on here somewhere that it's for real estate or professional use in some of the flyers. It'll say credit score, it'll say LTV, it'll say terminology. So keep that in mind. You don't want to necessarily give this to a consumer because it may not make sense to them. Okay. The only reason I show a customer these flyers is if the program that I'm showing them relates to one of these flyers. Okay, because it's not going to be very easy to understand. So, for example, single pay MI buyout program. Okay, when I give them this flyer as a consumer, one of the things I do is, let's say it's a lead coming in. They have FHA. I say, hey, you have FHA 3.5 down. How much do you have? They say, well, I have $15,000 for a $300,000 property. Oh, so you have 5% down. Well, have you thought about using our program where you don't have to pay mortgage insurance? So I'll give them this flyer because it's not very easy to read. It's a single pay MI, so it's a lot of acronyms. MI buyout program. Okay, it's really a buyout program, but to them, it's a no mortgage insurance program. So I give them this flyer just to reinforce that I have this program legitimately. That I'm not just making stuff up. That's the only reason that I will give them this flyer. Is just to show, so they can show their friends, and their friends will be like, "What the heck is an MI?" So it's not consumer friendly, but that's the way I do it. Okay, I give them the flyer that correlates to the program. Okay, I don't give them a whole bunch of flyer and say, "Hey, this is all I can do." The purpose of this folder is again to get realtor business, so that you can basically get loan. And the thing is, it doesn't matter what it is. By the way, here's the secret. If I have a conversation and I'm going over all these programs, at the end of the discussion, I have about 10 programs here, but on my site I have more. I have probably 15 different programs that can generate flyers. Here's what the realtor realizes at the end of the conversation. Oh my God, you guys have a lot of programs. Yes, we do. So yeah, I when they think about us, we want them to think about out-of-the-box scenarios. Okay, we want them to think about out-of-the-box scenarios. If it's in the box, they're probably using someone else. Then I gotta compete on rates or whatever, which I don't have a problem with. But I would rather compete based on something I can control, like speed or niches. Okay, so if a realtor sends me a deal that is going to use one of these programs, I set the expectation right away. It may not be a program that will close in 30 days. FHA flipping, there's 2 appraisals required. So how long will it take? There's right here, second appraisal required. It could take 35 days. It could take 40 days because I don't get to order the second appraisal until the loan gets approved. Does that make sense? So, that being said, I have chosen personally to get business based on out-of-the-box scenarios. Okay, instead of working hard and then competing against someone that is going to shop me and then basically waste all my time. I'm sure that's happened to everybody.
Do we have a hard money lender?
We have some hard money sources. I think they're on Deal Tracker. So let me see if I can pull it up. CLG, for example, is one of the hard money lenders, and Jeanette knows a whole bunch too.
Guzman, yeah.
So basically, when it comes down to the lenders and the programs, at the end of the conversation, the realtor says, "Hey, you guys have a lot of programs." I say, "Yes. Would you like me to come back and share with you some new programs?" I'll say, he'll say what? "Yes, of course," right? That gives me an open invitation to go to his office. All I gotta do is keep closing deals, and if I close that deal that has 1.5 years, guess what? I just created a new program. I got 3 lenders. I will take 1.5 year client with 1.5 year history on the job. I made a new program. That's it. That's all I'm doing. I'm building on what's working. Okay. And when that deal doesn't work, I don't have the program anymore. Okay, so I'm honest. So I get the appointment. I get to basically revisit the office. The receptionist sees me so much, they like me, blah blah blah, and so on and so forth. Okay, that's all I do. Repeat, repeat. Okay. Now let's talk about some other things because there's some programs that are not on here. Okay, so one of the biggest niches that I have right here is called flexible rental income rules. So what that is basically being able to use. Okay, so I deal a lot with first-time investors. Okay, that just happens to be a niche that I like, and I tell them part of my presentation is, well, I'll show you through my presentation. Okay, all right. So My presentation basically shows them this. This is my presentation for investors. It shows them that if they're buying rental property, they can come in with 20% down. If they're buying more than one unit, it's going to be 25% down. That's my presentation. I told them that the bank is taking the burden because let's say that they foreclose. How much have they lost? The bank's lost 75 or 80%. They have lost their 25 or 20%. Very, very little risk to them. Other countries, the rule is LTV, 0. That means if they're buying a second property, they got to come in all cash. Only this country is crazy enough to where they can put a quarter of the of the investment down, and that's all they risk. Okay. Right now the rule is 620. It says 620 is the minimum credit score to buy an investment property. Okay. The space that's least crowded is, in my opinion, is class 3, the multifamily space. That's why I like it, because I can get people, I can find houses on the market for more than 20 days. That will take financing. Okay. These are the old rates. Okay. This is basically in 2012. This is basically the pricing back then, 4.5%, which was a great rate. But now we're talking about getting people into a home with 3.875. So the last part of the slide, this is where you would hand them a flyer. Future rent out to income. Okay, in English that means that a borrower making 60 grand a year can use the rental income to help them qualify for the property. So if it's a duplex, they can use 75% of their rent to help them qualify. FHA has actually a little bit higher percentage threshold, by the way. If they're buying a fourplex, same rule. Okay. Again, we're talking about a brand new borrower. Okay, brand new borrower buying and using that rent to qualify. They could have 0 people skills, 0 experience, screw everything up, and make this vacant. Okay, you can knock down the walls and live in a giant house, I guess. So that's a crazy, crazy loophole. That's why it's very good to take advantage of it. This loophole, I predict, is going to by the end of the year, it's going to go away. What controls it? The answer is the DU system. If DU spits out 1-year history is required, sorry. If DU spits out 2-year history is required, sorry. But DU has a probability of spitting out that no history is required. Has a probability, okay? It's a random system. Like all systems, it looks at credit scores, it looks at different variables, okay? So, counting that income, we can put borrowers into higher priced properties where it would make sense where they're earning rental income. And the cool thing is, with this niche, I get to use the market rents. Not the actual, I get to use the market rents. This is determined by the appraisal. We know that the rental market has gone up. So a lot of times the market rent severely differs from the actual rents. So the second loophole, as I mentioned, is the first time investors can buy. We will see requirements on that lender experience. If the lender is a lender that has an overlay, they're going to require 2 years. They're going to make you prove it, even if the EU doesn't have it. So my niche again is, I have lenders that don't care and don't have an overlay on that. Do you understand what I'm saying? I have lenders that don't care and don't put a requirement on having a 2-year history. Okay, you document that with tax returns, by the way. Schedule E for 2 years. Duplex, triplex, and fourplex, they have bigger loan limits. So that same 417 loan limit for a fourplex is like 801. They can borrow more money at the same interest rate depending on how much the units are. Okay, anything over 4 units is considered commercial. So, in a nutshell, 25%, the risk is still lender borrower provided that proper cash flows. And in this market, we do a cash flow analysis. I'm going to use the one that we just did, Donna. So we do a quick cash flow analysis for the customer. What we found is that with the rates and with the prices, right now in this market, it's about a 10% return, 10 or 11% return. Which is pretty decent because the banks aren't paying that much in the bank. Cash flow analysis. In a year ago, guess what? It was more like a 20% return, but with a little inventory, that return is gonna go away. So we do stuff like this for the client because it can help them make an informed decision. Alright. So right here, we present this information. On the left side is the actual rents. So when they buy this property, the return on investment is 3%, but when they adjust it to market, it's 11%. Now, if you present information like this, and all I'm using is an Excel spreadsheet that one of the interns did for me last quarter, all I'm using is an Excel spreadsheet to present this information, okay? I don't need the land value, I don't need the building value, that's really not relevant, by the way. I put in put prices, so if I know there's multiple offers, I put above list price, because when you do business, you just want to set the proper expectations. If I put in, list price and there's multiple offers, it doesn't make sense. Right here, the interest rate 4.3. We know that the rate is maybe 3.875%. 3.875, 0.03875. Yes. No. Yeah. 0.03875. Okay. So what does that do to my cash flow? Oops, that's incorrect. Yeah, that's 100%. Okay. So who wouldn't want to buy a property like this if they're putting down 25% and they're getting cash flow, and all we gotta do is adjust the rents. They're buying the property at a 5% return, which is positive. They're buying it positive, and when they adjust the rents, 13% return. Now, when I present this is one component. Okay, use Excel spreadsheets.
Do you have this spreadsheet for us?
You can create it yourself.
Oh, yeah.
But I'll share it. The other spreadsheet that you have is called the payment option.
Suffer. Oh my gosh! Now I have to think how to do this.
For only $9.95, you can get a copy of the spreadsheet, which was done for free. Anyway, the payment option spreadsheet is another tool I use.
I'll sell it for $6.95.
I'm at $9.95. But the payment option spreadsheet is another spreadsheet that I use. What that is basically when you present to the customers. Let me see if I have any. When you present to the customers, there are different choices. So, for example, I'll lay out that the rate of 3.5% has a cost. 0. This is the cost. 3.65 has a rebate. Let's say negative 0.5%. Or sometimes in parentheses, 3.75, negative 1%. Okay? Believe it or not, 80% of the time, when I put this on a spreadsheet for my client, and I say pick A, B, or C, they don't choose D. Let me go call another broker and compare. They pick something here because at this level, I already have the trust. And I basically tell them this: if they're still in shopping mode, if they're not happy with this, you know what I say? I say, okay, we don't want any of these choices. Let's wait till we get the loan approved and lock it for 15 days. When we do a 15-day lock, what happens? This becomes an extra 0.25. This becomes 0.75. This becomes 1.25. The pricing gets a little bit better, right? So I have two gauges for the customer. I either lock it in, lock on a good day, great. Lock on a bad day, sorry, not my fault. But if they're not happy with any of these options, they do with the 15-day option. Okay, the pricing becomes better. Guess what? If they don't do it in a 15-day, what happens? Time is running out. They gotta lock it sometime. They're gonna lock it anyway. Do you see what I'm saying? It's really just about communication with the client and presenting this to them. So many realtors will simply, or so many loan officers will simply just do this. Your rate is 3.65, and you might get some credit. That's not the best way to present because the client wants to know what's controlling the rate. How much is the actual credit? Okay. I love it when it gets down to the detail where I can see like it's negative 0.7335 rebate coming back to you, which equates to $3,682. Why do I love it? Because I can't make that stuff up, right? It's so precise that it's coming from the system. Okay. The biggest misconception right here is that I have the ability to control this pricing. Okay, don't think like that. My composition cannot be changed. My composition is to help the lender. My composition cannot be changed. So I can't say, okay, I'll give you an exception because I like you, you're a good friend. Can't do any of that stuff. All right. So it is what it is. This is how we present it. My ability to basically have the customer trust me is based upon me showing them the variables that go into this. That I have 17 lenders, and that I chose this lender because it was the best lender for their scenario, and I have emails to prove it. Okay, that's basically one of the biggest advantages that we have as long as we present this information. Okay, any questions about that? So the payment option sheet, I don't have that, but it basically looks like an Excel spreadsheet as well, and it has lines like this. And the second question that they ask is their savings, okay, if it's a refinance. So don't forget to put that in there, on the top or the bottom, doesn't matter, as long as it's in there. If I chose 3.625, how much am I saving versus my rate right now, which is, let's say, 4%. So it'll show, okay, at 3.625, your savings is going to be $200 every month, whatever, okay? So you can't answer this question without answering this question, okay? It goes hand in hand, all right? And we do, I believe we do have these forms on Deal Tracker as well, all right? So again, what did you learn so far? One of the biggest advantages that we have is the ability to use raw findings, okay? One of the other things that we have is the ability to use our system to show customers and show agents that we have a great system that will help us find those weird out-of-the-box scenarios. From those out-of-the-box scenarios, we can create niches, okay? Legitimate niches. All we're doing is selling the raw findings, okay? For example, a no credit score program. It's not a no credit score program. It's just the ability to do an FHA loan with no credit score and finding a lender that doesn't have an overlay with no credit score. That's it. Realtors, they don't care. Clients, they don't care. They don't care how I explain it, as long as I have the program, okay? And if I have nothing to sell, if I have no niches left, because everybody's doing raw findings, what am I going to sell? Raymond, what do you think? If I have nothing to sell, what can I sell? I can sell my ability, myself. My ability to come into their office, give them accountability, my ability to help them with their scenario, my ability to push whenever I can, because I sit right next to my processors. So that's basically, if I have nothing to sell, I can sell that. In a nutshell, we also learned about the presentation. The presentation, as soon as the email blast goes out, which we recycle, by the way, we recycle the same email blast over and over again, but maybe like once a year, or maybe twice a year, somewhere around there, okay? Because some of these programs do not change, okay? For example, First Mortgage and our lenders keep sending us the same program over and over. I don't know if you guys know that.
Yeah.
FHA Streamline and No FICO. It's nothing big, but repetitiveness sometimes actually works. So when you see our email blast, you take the email blast, you put your name on it, you then probably have a flyer that you can customize with your name, and you go visit realtor offices and you get business. Okay? In this type of market, you want to work with the realtors that are you want to work with the realtors, is it on? Okay. You want to work with the realtors that are winners. How do you figure that out? You can look on the MLS. You can find you basically know the realtors that aren't winners will not survive. They can't get their offer accepted. It's tough. Okay, but the winners are typically, I have one agent I'm going to meet with next week. He basically does buyers. He's got 12 million in volume based on buyers. So it's possible. I got an offer accepted with 10% down FHA. People say you can't do that. Well, we have a really good system for generating approvals. So with our approval letter, you can get that done. So my philosophy is it's going back to the basics. It's going back to the basics, going out, blasting the niches, getting your name out there, and servicing the brokers. So when I used to go out twice a week, I would basically bring in between 5 and 10 loans per that office per month. I would have a lot of volume just by doing that discipline twice a week. Maybe once a week if I'm lazy, but typically twice a week. That's why Tuesdays and Thursdays for me transition. So tomorrow I'll be hunting. I'll be going on the field, and I have enough to talk about, enough to fill a conversation for 10 minutes if I have 10 minutes of whoever I'm meeting with. I have enough niches and programs. That's it. This is going to get me in the door. But this is not what I'm selling. What I'm selling is the system, the infrastructure, and myself. That's it. I'm not necessarily selling this. This is just going to get me in the door. The probability of them using one of these niches is very rare, honestly. Single pay MI. That's a great conversation starter. Hey, there's no mortgage insurance. But if it happens to be a client with a credit score of 680 buying a condo, the cost of buying it out is very expensive. You might not want it. So, I'm going in with my folder. This folder is my confidence. And whatever the topic is, I'm going to listen first. What kind of business do you do? Oh, you do a lot of FHA deals. Okay. I'm going to filter the FHA flyers, and I'm going to present it. Oh, FHA, did you know there's something called HomePath? HomePath actually allows you with no mortgage insurance to buy 3% down. By the way, I have a presentation on HomePath. If you're curious, can I set up a meeting with your manager at your office? It's that easy. We have a first-time home buyer presentation. Okay. We have a HomePath presentation. We have a VA presentation. So we have what I call grab-and-go presentations, where you have enough to fill up an hour of time and to get business. The trick is to manage your time so that you're getting business and filling your pipeline and going and get more business. Okay? The biggest mistake that a lot of people make is that they get too complacent. I got 5 deals in my pipeline. I'll be okay. It's not about number of deals. It's about having the discipline to go out, get more business, because some of those deals may not close. Some of the deals may have too high expectations that I wouldn't even take those deals. Some of the deals may be so complicated and have been rejected 3 times. I don't want those deals. Okay? I'll take a deal if it's rejected 1 time maybe. If it's rejected for a reason that I can address. If it's rejected for let's say occupancy. The old lender doesn't believe the borrower's going to live there. I better be sure that the borrower's going to live there. I'm going to tell them, hey, the lender's going to door knock, so you better live there. So we do have the grab-and-go presentations, and the purpose of this is to get yourself in front of the office. That's it. But really, in a nutshell, we're selling the raw guidelines, and we're presenting information in a way that is very clear to the customer. When we do it like this, they're less likely to shop us. There's more trust involved, because now they become part of the decision-making process. A, B, or C. And you'll find that the expectations, they'll understand it. When you educate the customer and let them know that this compensation, it's not a free loan. There's no such thing as a free loan. I would say that. But you can get a credit, so the loan can be more than free. But a lot of loan officers will have a problem selling it. They'll have to cover taxes, insurance, and have 0 out of pocket. I tell my customers, look, all I'm guaranteeing for you is if you choose a rate, which is your choice, by the way, that will cover your closing costs, whatever that credit is, you're going to get. If that reduces the amount of money to bring in, then whatever you bring in is whatever you bring in. A lot of agents will promise, you'll not have to bring any money in. I'll pay for the appraisal for you. No, don't want that. That's too crazy. Because you're going to take customers with high expectations, and you're going to end up wasting time because they'll shop you. They'll shop you throughout the process. When I make them part of the decision-making process, they're less likely to shop me. When they see the online savings and they do the math themselves, and if they see that it's a free loan, then they understand. Alright, so we covered rental income niches, we covered FHA, we covered Fannie Mae, we covered what I think will happen, which is they'll start to see some portfolio conforming products by the end of the year, where they're competing directly against Fannie Mae. And we covered really what is the secret of the flyers and the niches. Any questions?
All right.
Is the HomePath program financing only available for HomePath homes for sale?
That's correct.
Yes.
Yep, that's correct. It's a conversation starter, because a lot of realtors, with the lack of inventory, a lot of realtors can't get the offer accepted, but it's a conversation starter. Okay. Like I said, I go out, do a HomePath presentation, I might get FHA deals coming back. I don't get the deals that I do a presentation on, which is kind of weird, except maybe VA. I might get a little bit of VA deals. Okay. When I do a loan training, I get a lot of deals too. people just don't want to get the license, that they just say, I'm refinancing my house. So there's lots of different ways to get business. You can be as creative as you want. You can network as much as you want, and the cost really is very, very minimal. You just can't be shy, right, Raymond?
You have a lot of tools in place for these guys.
It's because I use the tools. If I wasn't using the tools, I couldn't sell it. But it all goes hand in hand. The tools, from the shopping feature of our site, to the accountability feature of our site, to the flyer generator that we probably never had back in those days. The ability to generate a flyer, and now I have email blasting going out, which any of my agents can take the email blast that we send and put their name on it to get more business.
Picture, name.
Yeah. People don't like pictures, but
Wow.
any questions?
Yeah, but if we do get a lot more loan officers using these tools, we're gonna get really busy. We're gonna need another process.
Rich, is it possible from the tool that we have to do this, that does the search, to go in-house with the results? For instance, I have 2 scenarios right now of the 2 things that you mentioned,
Okay.
and I haven't sent the email blast out yet
Okay.
because I haven't gotten to it yet. And
Hold
that
on,
one
hold on.
was less than a 2-year, and then the other one was, I have 2 that need to be refi, but they're either in a loan lot and one's coming out of a loan lot in July after 5 years.
Okay. So you asked a lot of questions. Let me try to address what I remember. So the first, create in-house results, right?
Right,
Answer-
so that we're not duplicating with the lenders, you know what I mean? So if you sent out that scenario, and I need the same answers, I'm not duplicating what you just did. So if you've put out a scenario and you get your answers back, is there a way to go in-house with that with us?
That's a good suggestion. I'll think about that. The
So
only
that-
problem I have with that is sometimes the 1003 and 1008 get transmitted, but maybe if we took the comments of the scenario and we said, okay, Jeanette shopped this scenario before, you should talk to her. Absolutely. I like that idea.
Yeah, it is pretty cool.
Yeah, so
Include
that,
the-
you know,
all
we're
of
not
them.
hitting the lenders with the
Yeah.
same questions, you know?
Right.
Same thing with us, because it's happened already, where I've shopped
A scenario?
certain scenario, and then Rhea, when she was here, did the same thing, and it was the same scenario. And, you know, a number of the AEs got kind of, a little frustrated,
Or did they?
because
Yeah,
they
they
got the
do.
same scenarios.
Oh, okay.
And they,
I
you
didn't
know, I've gotten comments back, and this has gone back, you know, since I've been here, because I've been using that.
You know, this is the first suggestion I heard that actually would solve that problem.
Well, because you hit it right on
Yeah.
today, and so I've been, you know me, if I don't blurt it out there, it's gone. So the first time I got it was last year, and Lito was one of them. They said, I already answered that for somebody in your office. You know, so it's like, yeah, well, that was that person, I'm me. So if there's a way to share that information of scenarios and who the lenders are that are doing those certain scenarios, then we're not hitting them up from the same office with the same question and, you know, raise right. I mean, I got that a couple times.
Okay. Yeah, I'll think about how to do that. The second question was, I forgot already. What was the second question?
That was a good question, the first.
Well, the second, oh, was there 2? I thought it was all in the same thing. Well, it's in the same area where sharing information in-house on here. And then who updates the deal tracker? Mary does?
The lender list, well, what I want to do moving forward is to give everyone access to the deal tracker, all the loan officers and so forth. And this way they can just type on here and just say, okay, we've adjusted, you know, this is our rep now.
Right, and
So-
passwords and so on.
Yeah, the
Because the
passwords are driving
password
us
was
nuts.
changed for one of our lenders day before yesterday, and
Yeah.
I was working late and could not get in, so that was so frustrating.
Yeah.
So Plaza,
Yeah.
our...
And the
our-
last request is a link to the websites, so that we can go directly to lender websites. Yeah. So I'm aware of those. I'm aware of those features, and I will. I'll try to implement some of these ideas.
Yeah, and the thing is, too, the tools are amazing. They really are.
Mhm.
The
Yes,
one,
sir.
and you know, I'm really not tech savvy, so it's difficult for me.
Mhm.
But the ones that I've learned how to use, I love them.
They're cool, aren't they?
Yeah, I
I see
just
it
need to get in, and it's the learning curve.
Yeah.
You know, people like Raymond, they just go in and you, Rich, you know, you guys are so computer savvy. But for a person like me to get in, but once I've learned it, it's very user friendly.
Yeah.
Yeah, so,
It's very functional. I wouldn't say it's user friendly, but the purpose, the output of it, although it may be ugly, the output of it is to give you tools that you can use. Like the approval letter, I've only heard of 1 or 2 cases where they've rejected our approval letter and they wanted a DU, but those are very rare. I mean, we really made an effort
well, I
to.
think since we changed the wording in it too.
Yeah,
that helped.
we really made an effort to try to improve it, and you know, that on that topic, if one of the values I have to the realtors is, hey, if your client needs to make an offer of, let's say, 585, but you showed an approval of 600, you're going to get a counter. I'm going to give you within 5 minutes an approval at 585, so you don't get a counter. So that's a value thing that might take Wells Fargo, Bank of America 24 hours to generate that type of approval letter. So I'm beating them with that because the approvals do get stored in our system. And you know, I'm using these tools, so I am very familiar with it, and I'm using these tools to make money. I mean, that's it in a nutshell. And you guys, I'm sure, have used the tools a lot. So it's basically a way to communicate. Because when I got to this industry, I said, oh my God, this is such a complicated industry. Why can't they have a 5-year fix with no guidelines, 30-year fix? You know, things really simple. But I learned all these rules, and they're still going to be out-of-the-box scenarios. But by having a system that will help us shop it, I can call, hey, why did you say you could do the deal when you couldn't do the deal? You know, when we get to the later stage of the deal. Any other questions?
No, the scenarios could be last 30 days. Go into a
Yeah,
scenario box.
because I
or
wouldn't want
something.
to keep it from a year ago
Yeah,
because
you
guidelines will
wanna
change.
Maybe drop it into a scenario box
Mhm.
and then your loan officers can go to the scenario archives and just type in a word and see if that
Yeah.
scenario is there.
Okay, done.